At this time during trading day, we bring you hot picks. Today, it's gold plays. Now, the price of gold still near those record highs above 2,500 it got to just a couple of weeks ago. Our guest says the gold miners and gold equities haven't seen the same kind of bump, and that's certainly borne out by our chart there. Look how the TSX index of gold stocks has lagged the price of the metal. We're joined by Alissa Corcoran, Deputy Chief Investment Officer at Kopernik Global Investors. Alissa, thanks very much indeed for coming on the show.
Thank you for having me.
Can we just jump in? Because I've got to get your take on Barrick Gold. It has been an underperformer relative to Agnico Eagle or Newmont, for example, but you see potential there.
Absolutely. And Barrick is just one of the many gold mining companies we have in our fund. But Barrick has gone through a transformation over the last 10 years, going from a company that was probably mismanaged, and then they diluted themselves and bought a good management team. So now what you have is a company that has very, very good assets, a very good management team, a strong balance sheet, huge resources. So they are very well positioned for the future. And like other gold companies, they are in half from 2011, even though the gold price is higher than when we saw it in 2011. So it's interesting that the gold mining companies have yet to realize that gold is near its all-time high.
Why has Barrick lagged the likes of Newmont and Agnico, though?
I think that there are some companies that are deemed better than others. And Newmont at times trades at a premium to Barrick, and we have often joked that if you moved Barrick into the U.S., you would suddenly get a bump in their valuation. Maybe that's going on right now too. But Newmont has generally been better managed historically. They also did a fantastic deal with Newcrest recently. Newmont actually is a larger position in our portfolio than Barrick is. So we like Newmont too. Both are very good. They both have the same properties in Nevada. So really, should this disconnect be there? We don't think so. But both are very good companies with very good resources. Interestingly, with the Newmont and Newcrest acquisition, we have noticed that these big companies are buying each other, where these big companies are depleting every year that they mine. They're depleting their asset base, and they need to replenish that. What they should be doing is buying companies like Seabridge, which is another pick of ours.
Oh, okay.
These are companies that have small caps but massive resource. We're not interested in owning the junior mining companies that haven't found gold, because it's very difficult to do that. But the ones that have, they're trading at a huge discount to the producers like Barrick and Newmont and Agnico Eagle that have frankly a good reputation, but also are producing and are producing cash flow today.
That's your next idea, Seabridge. I seem to remember that they've been working for years on an absolutely massive gold and copper mine in BC, but it would be expensive to develop it.
Absolutely, which is why you need a company like Barrick or Newmont or even, frankly, a big copper company. And this is a company that has a massive gold resource. To put this in perspective, they have 50 million ounces, whereas Barrick's entire gold resource is 180 million ounces. Can you imagine, if a company bought Seabridge, they could replenish their resource for decades. So to us, it makes sense that it would attract these partners, but it's going to be a partnership of probably a couple mining companies. This is a huge CapEx build. It's going to cost billions and billions to bring this out of the ground. And so this is not going to happen tomorrow. And I think that is also the opportunity, because if you don't have patience, if you have a short-term horizon, why bother with a company like Seabridge? We say this is an asset that will be developed, that's worth multiple times of where it's trading today. If this takes 10 years, you still get huge returns on that patience. Your IRRs are double digits. So that's the sorts of things that we're finding with companies of the Seabridge ilk. Now, this is part of a diversified portfolio, as I mentioned. This is just one of many, because the mining is a very risky business. There's lots of things that can go wrong in mining companies.
And your final idea, Wheaton Precious Metals, that would be one of your favorite streamers right now?
Yes, and so all these companies fit together like so. Barracks need the Seabridges, and the Wheatons provide the financing to the Barracks that builds these mining companies. And Wheaton Precious is it's a well-managed company. They have a strong balance sheet. They're very large, so they can compete with the likes of Royal Gold and Franco-Nevada. And their assets are phenomenal. So this is a company where the management team has invested countercyclically. They're taking advantage of optionality, which a lot of management companies don't understand and aren't valuing.
What do you mean?
So yeah, absolutely.
I'm sorry. What do you mean by optionality?
Yeah, so optionality is really seeing that there's not just one path. So what happens is that investors forecast one price, and then they don't value the fact that the prices could rise, or maybe there's more ounces in the ground. So many of these companies like Seabridge, that optionality is not being valued. They say, oh, it would take more than $2,500 to get it out of the ground today, worthless. There is a value for this company. There is a value if it trades almost like a call option, where if suddenly gold is $2,500, $2,700, the company is worth multiples. So that's the sort of optionality that is not being priced in, because investors are so focused on cash flow today. So if you could think about it, the opposite of optionality is a DCF model, where time is your enemy. With options, time is your friend. And so you want these companies that will be around for a long time. When you use a DCF model, after 20 years, there's no value. So that is a big misconception in the mining industry today.
Alissa, we've only got 10 seconds. What is the gold fund that you're involved with? What's its name?
We run a mutual fund, the Global All Cap Fund, Kopernik Global Investors.
Okay.